I think we've got the management of Zydus Wellness now joining us. They've acquired UK-based Comfort Click for about £240 million. We have the CEO, Tarun Arora, now joining us. Tarun, good to have you with us here. We're going to talk about 3 points here. Let's just quickly go across to Tarun. So we'll talk, of course, about the synergies behind the Comfort Click acquisition. We'll talk about the pickup in growth post the first quarter, which was kind of weak. And, of course, revenue scalability in international markets as well. Tarun, good to have you, and thank you for joining us. So the first point, the logic, the synergies behind the Comfort Click acquisition.
My pleasure to join CNBC. I think if you really look at it, our journey on consumer wellness has covered a broad spectrum of spaces, broadly under 2 heads: food and nutrition on one side and personal care on the other side. Food and nutrition has been our largest space and provides a lot more opportunities on expanding wellness space. Specifically, if we focus on nutrition, we acquired last year RightBite, which was basically a max protein sub-brand, which looking at macronutrition. We obviously recognize that there is opportunity to build further on the micronutrition. Therefore, the VMS segment is something we've been fairly keen on building forward. So there have been several thoughts around it. So it's one space that we were looking at. Secondly, as the world evolves and the ways of consumer behaviors are changing, and the digital space has become extremely crucial for us to build on. So that was the other tick mark that happened. And third was Complementary Geographies. They're largely a Europe online first VMS brand and doing rather well, growing at more than 50% over the last 5 years as a CAGR. So very successful business built on a very basic fundamentals, amazing set of products. So we said this really fits in from all those points that I mentioned. So a great tick mark from our strategy forward, and that's how this happened.
Tarun, no, that's very well explained. We have more questions. Can I request you, Tarun? The line is a little shaky. If you can ask, I think you're in a car, but is it possible for you to just sort of just park on the side of the road? I mean, the reception will be better. We can hear you clearly, but your video is a little patchy. Nigel, go on.
All right. Hi, Tarun. Good morning and good to see you. Ben, could you give us, a little bit of a sense in terms of revenue scalability? Comfort Click has moved up to around $130 million from just around $50 million in 2 years. How do you see the revenue scale up from here? If you could give us, say, a 2-3 year horizon from here. And margins as well, I think it's in mid-teens. Do you see it scaling up even further from here?
So we do believe the growth trajectory is consistent even for going forward. We don't give any specific trajectory, but our own view is that it'll be a high double-digit growth even here on as well. And there is enough and more potential within the European markets. Comfort Click also got into US market, and there are multiple opportunities. If you really look at it, there are many other markets that we could extend Comfort Click to. I'm not just counting India as well, but it could be Middle East, Brazil. I mean, several other markets. So US itself is such a large market. So we look at all those. So our view is that a growth journey will continue and at a high double digits. Going forward
but the entity
from a margin perspective, I think
Tarun, the entity is growing at 50-60%. $53 million has become $134 million. So double digit is being very, very modest. Do you think it can continue the kind of momentum that it's been growing at? And also, if you could tell us with regard to margin moving up from here on.
Yes. So I'm saying will remain consistent. Now, numbers are very hard to not commit, but double digits will stay.
I think it's just a bad line. Can we put Mr. Tarun on the phone line? If he can, let's do that. Because the audio, the video quality, and I think now the audio quality is also a little poor. But that's an important conversation. I'll just wait for 2 minutes if you're able to do it. Guys, we have Tarun back if we have a question. Najib.
Yeah, all right. Tarun, you're making that point. You said that it's difficult to give a number, but the question was, can Comfort Click continue growing at the similar momentum that you have seen? And you were also giving us a number in terms of margins. Please go ahead.
Yes. So our belief is that they've grown at 57% 5 years.
Yes.
We hope that we can continue. The momentum is there. The numbers will be a function of the market and opportunities, and also how new markets shape up. But the momentum continues, and we do believe there is more opportunity sitting there. So we're working with the team to see how we can do. On the margin front, it's quite digital marketing is an expensive proposition, but we hope to further look at operating leverage flowing out. So right now we'll hold it at mid-teens, but maybe 6 months or 12 months into the business, we should talk about what are further opportunities. But right now I'll hold it at mid-teens as it is.
Mid-teens. All right. And you think that in the next 5 years, the business can be a $500 million revenue opportunity?
We sincerely
mathematically it appears possible.
Global market is huge. Market is huge. The possibility absolutely exists, and new markets that we are extending are even bigger. So if we get it right, we can get there.
What is the current share you get from international revenue from the international markets? And post this acquisition, where do you see this scaling to?
So currently our international markets account for 3 to 4%. Post this acquisition, it's almost half our current business, so assuming a 1/3. So about 33-35% is where we land up this year at. And then we'll see here on how the things shape up.
Sure. So the goal would be to take it to what? In terms, if you look at a mix.
So I think we've already got our mix very well. Now, whether it lands up at 40-50% or the Indian momentum also picks up is something to see. But right now, this business is growing at a much faster pace than the India business. So the mix may change in favor of the international business over the coming years. But we'll have to wait and watch how it happens.
Okay. Right. Got that. Tarun, thank you very much for joining us, and appreciate you joining us on, of course, the phone line now. But hope to see you here in the studios sometime soon. Good luck with that acquisition as you execute this one, Survey.